Polygon, formerly known as MATIC Network, is a structured, easy-to-use platform for Ethereum scaling and infrastructure development. The core component of this ecosystem is Polygon SDK, a modular, flexible framework that supports building multiple types of applications. To understand Polygon, one must first understand the limitations of the Ethereum mainnet, specifically high gas fees and slow transaction speeds. Ethereum can only process about 15 to 30 transactions per second, which is insufficient for global adoption. Polygon effectively transforms Ethereum into a full-fledged multi-chain system, often referred to as the Internet of Blockchains. This multi-chain system is akin to other ecosystems such as Polkadot, Cosmos, and Avalanche, but with at least three major upsides. The first advantage is that it is able to fully benefit from Ethereum's network effects, which is the largest developer community in crypto. Secondly, it is inherently more secure because it leverages the robust security model of the Ethereum base layer. Thirdly, it is more open and powerful, allowing developers to choose the specific scaling solution that fits their needs. Polygon utilizes a variety of technologies, most notably the proof of stake (POS) commit chain. A commit chain functions as a secondary network that operates alongside the main blockchain. In the case of Polygon, it bundles groups of transactions together and processes them off-chain before finalizing them on Ethereum. This approach significantly reduces the load on the main Ethereum network, leading to much lower costs for users. Beyond POS, Polygon is heavily investing in zero-knowledge (ZK) roll-up technology, which is considered the holy grail of scaling. ZK rollups use complex mathematical proofs to verify transactions without revealing the underlying data, ensuring privacy and efficiency. Polygon Hermes, Polygon ZK-EVM, and Polygon Maiden are all part of this ambitious ZK strategy. The platform also supports plasma chains, which move assets between the main chain and child chains via plasma bridges. By offering a one-stop shop for developers, Polygon has attracted thousands of decentralized applications, DApps. Major DeFi protocols like Aave, Uniswap, and Curve have already deployed on Polygon to offer users a cheaper alternative. The architecture of Polygon consists of four distinct layers: the Ethereum layer, security layer, Polygon networks layer, and execution layer. The Ethereum layer is a set of smart contracts on Ethereum for finality, staking, and dispute resolution. The security layer is an optional layer that provides validators as a service to check the integrity of any Polygon chain. The Polygon networks layer handles local consensus and block production for the various independent blockchains in the ecosystem. Finally, the execution layer is responsible for interpreting and executing transactions that are sent to the Polygon networks. This modularity ensures that Polygon can adapt to future technological shifts in the blockchain industry. In essence, Polygon acts as a bridge that allows Ethereum to scale while maintaining its core principles of decentralization. The vision of the founders was to create a borderless economy where users can interact with financial services without friction. As we move forward, Polygon continues to evolve, rebranding and upgrading its infrastructure to meet the demands of Web3. The sheer volume of transactions processed on Polygon often exceeds that of the Ethereum mainnet during peak times. This success is a testament to the technical robustness and strategic positioning of the project.
Investing in Polygon can be approached through several different methods depending on an investor's risk tolerance and technical expertise. The most common way to invest is by purchasing the native token, which is currently transitioning from MATIC to POL, on major cryptocurrency exchanges. Centralized exchanges like Binance, Coinbase, and Kraken provide a user-friendly interface for beginners to buy and store their assets safely. For those who prefer decentralization, MATIC and POL can be swapped on decentralized exchanges, DEXs, such as Uniswap or QuickSwap. A more advanced investment strategy is staking, which involves locking up your tokens to support the network's security in exchange for annual rewards. Delegated proof of stake allows smaller holders to delegate their tokens to a professional validator without having to run their own hardware. By staking, investors not only earn a passive income but also contribute to the overall decentralization and health of the Polygon ecosystem. Another lucrative way to engage with the network is through decentralized finance, DeFi, protocols, where users can provide liquidity to earn fees. Lending and borrowing platforms like Aave and Compound on Polygon offer interest rates that are often higher than traditional savings accounts. Yield farming is a high-risk, high-reward strategy where investors move their assets between different protocols to maximize their returns. Beyond financial tokens, many investors are looking at Polygon's thriving non-fungible token, NFT, marketplace as a long-term opportunity. Major global brands such as Starbucks, Nike, and Reddit have chosen Polygon to launch their digital collectibles and loyalty programs. The low transaction fees on Polygon make it the ideal network for high-volume NFT minting and daily microtransactions. Polygon is also a leader in the blockchain gaming sector, often referred to as GameFi, hosting hundreds of play-to-earn projects. Investments in these gaming ecosystems often involve purchasing in-game assets or governance tokens associated with specific virtual worlds. Strategic partnerships with institutional players like Google Cloud and Disney highlight the project's long-term viability and professional backing. The introduction of Polygon 2.0 aims to create a value layer for the Internet, unifying all Polygon chains into a single seamless network. The core of this vision is the aggregated layer, AggLayer, which provides unified liquidity and shared state across multiple chains. For long-term holders, the migration from MATIC to Pol is a fundamental shift that enhances the token's utility within this new architecture. Investors should always perform thorough due diligence, as the cryptocurrency market is known for its high volatility and unpredictability. Security is paramount, therefore, using hardware wallets like Ledger or Trezor is highly recommended for storing large amounts of tokens. The future of Polygon looks promising as it continues to innovate in the field of zero-knowledge proofs and scalable infrastructure. By bridging the gap between Web 2 and Web 3, Polygon is positioning itself as the backbone of the decentralized future. The project's roadmap includes further enhancements to user privacy and even greater reductions in transaction latency. Institutional adoption is expected to increase as more traditional financial services integrate with Polygon's secure side chains. The community-driven governance model ensures that token holders have a say in the future direction of the protocol's development. Polygon's environmental impact is also a key consideration, as its POS mechanism is significantly more energy efficient than Bitcoin's POW. Ultimately, Polygon aims to empower billions of people by providing equitable access to global financial markets and digital ownership. Keeping a close eye on the project's official social media channels and developer blogs is essential for staying updated on new milestones. Whether as a developer, a user, or an investor, Polygon offers a multifaceted ecosystem that caters to all participants of the digital age. The success of Polygon is deeply rooted in the expertise and vision of its founding team, which started in India. The project was co-founded by Jayanti Kanani, Sandeep Nailwal, and Anurag Arjun in 2017, originally as MATIC Network. Later, Mihailo Bjlik joined as the fourth co-founder to provide a more global and technical perspective to the project. Jayanti Kanani, the former CEO, is a brilliant engineer who contributed significantly to Ethereum's Web3.js and Plasma implementations. Sandeep Nailwal is a software developer turned entrepreneur who has become the face of Polygon in global marketing and business strategy. Anurag Arjun brought extensive experience in product management, ensuring that Polygon remains user-friendly for developers. The team's primary mission was to fix Ethereum's scalability issues without compromising on security or decentralization. In terms of the native asset, the network originally launched with the MATIC token as its primary utility currency. The MATIC token serves three main purposes: paying transaction fees, securing the network through staking, and governance. Users must pay a small amount of MATIC for every transaction they perform on the Polygon POS chain. Validators and delegators stake their MATIC tokens to participate in the consensus mechanism and earn rewards. As part of the Polygon 2.0 upgrade, the network is transitioning from MATIC to a new token called POL. POL is described as a hyper-productive token that can be used across all Polygon-based chains. Unlike MATIC, POL allows holders to validate multiple chains within the ecosystem simultaneously, increasing their earning potential. Regarding tokenomics, the total supply of MATIC was capped at 10 billion tokens. The initial distribution was strategically divided to ensure long-term sustainability and ecosystem growth. About 3.8% of the total supply was sold during the initial private sale in 2017. The Binance Launchpad sale in 2019 accounted for another 19% of the total supply, bringing significant liquidity. The founding team was allocated 16% of the tokens, which were subject to a strict vesting period to show commitment. Advisors received 4% of the supply to provide strategic guidance during the early stages of development. Network operations and the Ecosystem Foundation received 12% and 21.86% respectively to fund continuous improvements. The remaining 12% was reserved for staking rewards to incentivize participants to secure the network. With the introduction of POL, the tokenomics model is shifting towards a continuous annual emission rate. This 1% annual emission for POL ensures that validators are always incentivized, even after all MATIC tokens are distributed. The transition to POL is designed to be seamless for users, with a long migration period to prevent any loss of funds. Investors view Polygon's tokenomics as robust because it balances scarcity with the need for network security. The burning mechanism, inspired by Ethereum's EIP 1559, also helps in reducing the circulating supply over time. Every time a transaction occurs, a portion of the fee is burned, potentially making the token deflationary in high usage periods. Polygon's team continues to expand, hiring top-tier talent from major tech companies like Google and Microsoft. This combination of a visionary team and a well-thought-out economic model makes Polygon a leader in the Web3 space. If you found this breakdown of the Polygon network helpful, please hit the like button and subscribe for more crypto insights. Don't forget to leave a comment below with your thoughts on the MATIC to POL transition.